Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Hello everybody, this is Coach D with TackleTrading.com. Wanted to come at you with a play of the day, something to look forward to this next week as a potential strategy. Now, when we look at the market conditions, I would dare say that picking the direction right now is a little challenging. We saw the market retrace and came down into a nice support zone. I had a great day trading yesterday, catching that pump the day the market gave up the gains on Friday. Not overly surprising. We could see it hold this ground and rally. We could see it give way to this zone, and we could see it drop some more. Since I'm not overly confident on the direction yet, and we would need some confirmation due to exactly where it's kind of sitting. It's literally smack dab in between support and resistance, and I can see it easily going either way. Now, of course, we'll take into consideration all of the economic data and reports that are coming out next week, and we'll keep an eye on some of the other outlying factors like the dollar and things that can pressure the market. But I was thinking about what time of year we're in and what time of we're kind of in that lull between earnings season. We got earnings coming up again towards the end of April. And I thought, why not go for a Vega play? It'd be the perfect time to do it. So a Vega play is the ability to identify an opportunity. I'll give you an example of ISRG. And ISRG, Intuitive Surgical Devices, stock right now is kind of in a sideways move. It's a pretty volatile stock that has a tendency to gap big on earnings. And if we go look at the volatility cycle on this particular stock, you'll notice that this has a very, very regular volatility cycle around earnings. Volatility is low, and you'll see it rally up into the earnings announcement and then crush. It'll be low, 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 low. And a couple weeks prior to earnings, you'll see it rally up into the earnings announcement and then crush. Well, here we are. Volatility is near the lows. And I see the earnings announcement coming out, and we're in a sideways consolidation. Could go up, could go down. There's a head and shoulders in here. We could see it breaking down, and we could see it running up. I'm going to break it down into two volatility strategies for you. I'm going to actually do it in separate videos. And I want to approach this from the standpoint of doing either a straddle or a strangle, where we buy options now while the volatility is low in anticipation that the volatility will rise, and we make this trade bi-directional, meaning it doesn't matter if it goes up or that it goes down. We will do best if it moves up or down, and that the volatility increases a reasonable amount. And that certainly seems to be the tendency, or the trendency, if you will, of this particular stock. So that's one way of approaching it, and I'll make a separate video for that. Then I'm going to come back and do a Vega positive strategy, another volatility strategy to take advantage of that same rise in volatility, where I will sell options and buy options at the same time to create it's a double diagonal strategy, which is also bi-directional. And it will take advantage of not only the increase in volatility, but it'll be positive in time decay, whereas the straddle will be negative in time decay. So we'll kind of compare and contrast the two, and I'll do them in separate videos and give you some strategies or plays of the day to think about, and you can add them into your playbook. This is Coach D. I will come at you soon with those videos.
Isn't it time you got off the sidelines and tackled trading? Join our online community of active traders where we make it happen every day. Stocks, options, futures, and Forex at www.tackletrading.com. Get in the game.